For those of you that don't know me, just a quick brief introduction. Rich Munroe with Diamond Edge Properties. I'm based here in Atlanta, Georgia, with properties also in the Tampa, Florida market. My wife and I have been in real estate investing for right around 20 years, and we shifted away from fix and flips and long-term rentals about 9 years ago. And so we focused specifically on short-term rentals, and we developed a portfolio of about 75 properties that we are a combination of properties we manage, properties that we own, and then we also do the master lease or the rental arbitrage strategy. And so we kind of employ all three strategies, and we have one back office operation that basically supports everything. Feel free to use the question and answer box. Right now, we don't have the chat enabled at this point. So throughout the presentation, feel free to throw in questions as you have them come up, and I'll either try to address them as we're in that section, or I'll handle them towards the end of the presentation. So I'm really excited to kind of give everybody an update on this because, I've been a user of AirDNA really from the very beginning, and the recent changes that they have made, not only the ability to kind of slice and dice historical and forecasted data, but also at a very reasonable price. And so they've kind of shifted away from selling market by market to only doing kind of a full subscription. And so basically when you join, I think the lowest end tier right now is free, which gives you kind of just a basic market search ability. But then they also have a $25 a month option that basically gives you full access to most of the tools, as well as all the data around the world, essentially, not only just throughout the United States. And so that becomes very handy when you're looking at doing investments for short-term rentals, when you're actually going to be purchasing the property, and you're not really sure what market you want to kind of focus on. And so same thing if you're doing rental arbitrage, obviously, it's an upfront investment. So you want to make sure that you understand the numbers and the short-term rental potential compared to where it is in other markets. And then also, if you want to focus on managing other people's properties, it's good to kind of have this knowledge and be able to determine which markets are performing and at what level. And so that's what I'd like to accomplish today, is kind of walk through, give you guys just an overview of the platform, so that you can start to use it as you are determining what markets to kind of navigate in and grow in. And so what I'll do here is share my screen. And basically, this is kind of the when you first sign in to AirDNA, this is kind of what you're going to see. You actually have the ability to choose any market in the world. And so for the purpose of this presentation, I'm going to focus on the United States, but you can search internationally at other countries as well. And so one of the things that AirDNA has done basically is they've had the ability to have you be able to do different searching and sorting based on different scores. And so they've come up with these different scores that they're scoring each market. And basically, the market is determined based on investability, which is kind of the most informative one. Investability is actually looking at the cost it is to purchase a property compared to the short-term rental revenue. And so you can hang your hat on from a 0 to a 100 score. It scores that market based on how much it costs to purchase a property compared to what your short-term rental revenue is. So when you're looking at not only purchasing properties, that's going to give you a good indication of where it falls in line compared to other properties. You can also utilize that in the beginning if you're doing rental arbitrage, because obviously the purchase of a property, the purchase price is typically related to what you can rent it for on a long-term rental basis as well. And so that still gives you a good barometer, even if you're using rental arbitrage as your strategy. It also gives you a score for rental growth and basically the growth that is in that market, looking at how many listings have been added and are forecasted to be added. Rental demand, of course, which is basically how many guests are coming into that market, and comparing it to the other markets and kind of giving you a score there. Seasonality, obviously there's certain markets that are a lot more seasonal than others. And so that gives you an indication of the seasonality score. And then last but not least, we're all familiar with regulation. And, just to mention, as we're on that topic, as you guys know, we basically recommend that's before you even start looking at these numbers on AirDNA and looking at different markets. Your first step is to confirm that the regulation is not an issue in that market before you start investing time and energy and money into that. So that's really an important piece, but they also score here for us to be able to kind of give you that differentiation. So the other neat thing that you can do here is you can actually sort all of this data based on market type, right? And so let's say this is the entire market of all available listings, but let's say I just want to look at urban and metro areas. And so I can basically adjust, and it will only provide, those urban markets. And it basically, you have the ability over here to sort it based on the score, the market score, 0 to 100, or you could do it based on revenue. Which markets in the urban metro have the highest potential revenue-wise. You can also do it based on occupancy. And you can also do it based on daily rate. And so this is basically giving you just the urban metro and being able to sort it based on those different algorithms. So for right now, I'm just going to keep it on the market, the investability score for now. And so Louisville obviously scores pretty high here, San Francisco, Santa Monica, and so on. But it continues to rank it all the way down, all the way throughout the lower scores as well. And so you can see Atlanta's down here. A lot of us are in the Atlanta market. It's scoring like a 68 out of 100. And it is, giving us the 51% occupancy as an average on all properties, and 37,000 in revenue. So the other thing you can look at too, which we tend to like looking at, is the mid-sized city, right? So instead of urban market, let's see what the mid-sized cities look like. Mid-sized cities are typically ones that are not, like the main metro areas, but they still have a lot of potential. And as you can tell, Savannah here is pretty high on the list, as is Athens, and so on. And another city that's pretty good down here in Florida is Bradenton. That's a little bit south of Tampa. And so let's just kind of do a deep dive, and we'll click on this market. Obviously, you can plug in whatever market you want to do your analysis on. But for the sake of this example, I'm going to kind of choose Bradenton. It's not, most of the city is not necessarily along the ocean. They have Bradenton Beach, which is along the ocean and the coastal side, but much like Tampa, you don't necessarily have to be on the beach to be successful with short-term rentals. And so Bradenton is another city that's similar to that. And so let's look at what they're showing us here, right? So you've got your annual revenue, occupancy rate, your average daily rate, and what's called revenue par. Revenue par basically is just looking at the monthly revenue and dividing it by 30 to give you a daily rate. And it's just an easy way. Hotels have used that definition for a while, basically to kind of differentiate how they're performing over other hotels. And so it's more, revenue par is mostly a hotel type measurement, since we usually try to look at the average daily rate. So we're not that concerned about what it's doing for the entire 30 days. And then so it shows you for that market. So in Bradenton, basically, we've got an 84% or 84 investability score, 86 rental demand, 49 revenue growth, 44 seasonality, and 52 on regulation. And so I would probably want to check into, I think there are pockets of Bradenton that might have some restrictions. And so that kind of gives you a little bit of a red flag if it's scoring that low on the regulation, that you want to do a deeper dive there. And so it's showing us, slicing and dicing that market. There's available 2,200 listings. It's a 32% increase over last year as far as the number of listings. And so that's another thing to keep an eye on is, how quickly is that market growing? And is it getting to the point where it could have some oversaturation? It breaks down for us the number of listings that are in each between Airbnb and VRBO. With this being kind of a Florida-based city, a lot of the VRBO listings are a little bit of a higher percentage than most markets. And there's still kind of most folks are listing on both platforms. And then this is another thing that we like to look at, and that helps you determine when you're figuring out what you'd like to invest in as far as the size of the property. And so, this is helpful to give you an immediate snapshot of what that market breakdown is. And most of you that have seen some of my trainings before, we talk about some of the larger performing or larger size properties that typically have a lower percentage availability in most markets. And if you invest in some of the larger properties, you tend to get higher occupancy as a result of that. And so Bradenton is no different, only 4% or 5+ bedrooms. Most of the sizes are in the 2 to 3 bedroom range in the market. This gives us a visual of the number of listings as far as the rental growth over the last several years. And as you can tell, it's definitely spiked up here earlier this year to over 2,000 listings. Historically, before that, it was definitely closer to 1,200 to 1,600. So another thing that is good to know about the market is looking at your availability. And so the next chart is showing us how many nights the listings are available. And so if there's some of those, there's a lot of these properties that aren't available for the full year. So in this market, it's kind of like the snowbird market. So you may have a lot of folks that are renting out their property and going down during the winter months and renting it out when they're not there. And so there's a high percentage of properties that are not typically available for the entire year. And so that just gives you a sense of that. Then also kind of property type, entire room versus shared room. Another thing to kind of be good to look at is the cancellation policy. If you have a lot of bookings that are occurring far in advance, most folks like to put more of a strict cancellation policy. And so this gives you an indication that there are quite a few bookings that are probably further into the future. And so you've got more than half of the folks that are putting a strict cancellation policy there. Also, the minimum night stay in terms of what the availability is for those listings. And this also gives you an indication on what might be going on with regulation. So, for example, if you have a high percentage of 30+ nights, then there might be some issues there. So it's always good to kind of pay attention to that as well. Same thing with if you don't have a whole lot of activity in the 1, 2, and 3 nights. There are some markets that limit to 7 nights. The other thing, obviously, is the amenities. And so, if you're looking here, one of the things to kind of point out is, and being in Florida, 48% of these listings have a swimming pool. And so when you're looking to invest or start a property in that market, you're going to be competing with a lot of the listings, almost half, that basically have swimming pools, and there's another percentage that have hot tubs. And so that's another thing to kind of keep an eye out on to see what kind of amenities the listings have in that market. One of the other things that it's giving us here, which is also handy, is knowing who are the larger property managers in that market. And so property managers are typically going to outperform the market, usually by 15 to 20%. And so it's good to know kind of what concentration and which property managers are participating in that market. What I usually like to do is if I'm entering a new market, I'll kind of look and see take a look at some of their listings and just kind of understand what their product looks like, what the furnishings and staging looks like. That way you'll know how to be competitive or kind of know exactly what your competition looks like, right? So the next part that we're provided here, which is definitely helpful, is they break out and give us a little bit more details on occupancy, nightly rate, and RevPAR. And what's neat about this is you can actually, depending on the level that you've subscribed to, you can go as far back as 5 years. And so for this particular market, it's letting me know, based on these different color bands, how it performed year over year over the last 5 years. And so, the blue line is 2023. And so relative to the prior year, it's kind of very consistent in terms of performance. So the last 2 years have been very consistent in terms of occupancy activity. And I always like to look at as a benchmark in 2019, as you guys know, is kind of before we had COVID happen. And so those of you that are fairly new, the activity that occurred during COVID in most markets typically was an inflated occupancy rate and an inflated nightly rate. And so when I'm looking to invest in a market, I typically want to make sure that I understand, yes, in 2023, the occupancy is definitely higher than it was pre-COVID. But I just want to be able to be conservative and kind of look at what was it pre-COVID? What was it actually activity going on before the markets had that huge disruption? And so I usually like to keep an eye on that just as a base mark. So that's super productive. There's also some other things that you can adjust for here is how long guests were staying. And so this gives you a chart of the average stay during that 12-month window. And so, there must have been some things going on in May that caused kind of a dip in the amount of time that folks were staying. And there's different attributes that you can kind of dig into here. Again, it gives you another look at the bedroom count, but not only the bedroom count as it is today, but over time. And so you can kind of do an analysis there as well to understand how that market has changed as far as the bedroom counts. And it kind of lets you know what's been a growth section for different size properties. And, I think that's helpful when you're trying to determine in the beginning what size property you want to focus on. And so this gives you a good breakdown of the historical performance based on the size of the property. Another good thing to look at is how the demand has been changing over time, number of nights booked and booked properties, and basically kind of giving you that stat to look at. This last one is super important too, just to understand how long it's taking folks to book, how far in advance, when are future reservations being booked, right? And so this gives us a visual of month over month, kind of the breakout of when those bookings are occurring for booking trends. And so that's just good to know as you're looking at your future calendar to understand what that dynamic looks like. You can actually stretch it out over the next 6 months as an example to see over time how that looks. So let's move on to the revenue. Revenue also gives you a similar feature with the last 5 years as occupancy does. And as you can see, 2023 is outperforming the prior years as far as revenue goes. That definitely doesn't surprise me. If you remember when we first looked at this market has grown over 30% year over year. And so you got to factor in that market has grown tremendously. And so that additional revenue is looking at mostly new listings that have occurred as well, for 2020, 2022 and 2023. And so that's why you have to look at all different data points to kind of understand what's going on in the market. Revenue is definitely outperforming even not only pre-COVID, but also post-COVID numbers. You can also break that out by earnings by bedroom as well. And so each one of these different views are going to give you that ability. So if you're only focused on a certain bedroom count, you can kind of do a deeper dive with these different drop downs here. Also slices and dices based on houses or apartments, for example. So it gives you some different views that you can, play around with. So the other thing, the nightly rate obviously is an important thing to look at, but it gives us the same ability there historically to look at the nightly rate year over year. And like we've already seen, the revenue is definitely higher than it was in the prior years. The nightly rates have gone up, pretty consistently from 172 pre-COVID to now 291. And so that's a pretty significant growth. It also breaks it down by luxury properties as well. And it gives you kind of a snapshot of the professionally managed. And so like I was mentioning before, the market average daily rate here is 285. Professionally managed properties is considered a little bit higher, 323. And so usually the professional managers and folks that we're working with within BNB Investing Group are typically going to be performing at this higher level. And so when you're evaluating your market, it's good to be conservative and look at the average daily rate, but know that you're basically going to be outperforming that if you're running this like a business like we do with BNB Investing Group, and making sure that you've got all the automations in place to maximize your revenue. One of the other cool things here on RevPAR is the ability to basically see the seasonality. And so we can look at, what time of the year, based on seasonality, is having the higher occupancy, higher revenue. And so this gives us a visual. The darker colors basically are higher RevPAR. And so, February and March, we're averaging, 295, 325 actually. And then on these other months, we're lower. So August, September are the two lowest months from seasonality. And then, January, February, March, no surprise. That's where we have a lot of the snowbirds that are going down from the north and the Midwest to the warmer climate and coming down during those times. That's why we have a little bit of a higher pricing. So this kind of lets you know what's going on in the market, that you can be able to see what the seasonality looks like. So the next thing, now that you've kind of done a deep dive on Bradenton, the city, what this lets you do is, okay, let's slice it within those 2,000 listings. Let's slice it into different submarkets. And so right now, the submarkets basically are divided based on zip codes, but they will be, this is going to be an update probably in another month or so, where they're going to have the submarkets defined based on neighborhood, right? So zip codes are still good, obviously, from an investment standpoint when you're doing a search for your properties. And so this is a good way to break it out. Same thing here like before. You can change your priority and kind of reshuffle them based on revenue or occupancy or the market score. And so let's say this is a brand new market I want to go into. It tells me right away that this zip code is somewhat outperforming on revenue, occupancy, and investability. So it's, again, investability is a key factor because it tells me that properties are a little bit more reasonable to purchase from a purchase price standpoint compared to what we can get for short-term rental revenue. And so if we wanted to do a deep dive on that market, the exact same charts that we looked at on the full market. You can also do a deeper dive just on that submarket, on that zip code. And so it's only 408 listings that are in this zip code, and it allows you to do a very similar analysis like we just ran through on the full market. And so it gives you the same access, same charts, and allows you to do same thing as well with the number of years. So you can look back on the historical performance for that mark, for that zip code, and so on. One of the other things too that, in addition to seeing the bedroom size here in counts, you can also make that change basically up here. And so, let's say I want to be clear, I only want to look at entire place. I'm okay with looking at apartments and houses and a mixture. But let's say I'm interested in only looking at 3 bedrooms. And so I can make that change here, hit the apply button. So now it's should be updating for those listings. And so I think mostly the next thing that it does, so besides, the submarket, you can also do a deep dive on the properties that I just sorted for. So I just chose 3 bedrooms. So this is providing me with all of the active short-term rental listings in that zip code that are 3 bedrooms. And it also kind of gives me a map view over here that shows me on the map kind of where those properties are located. And so the other thing too, obviously, that I think is huge. So, let's look at a property here. This guy's available. Let's find a good one. So, all right. So this guy's got 98,000 potential revenue. It's only available 236 days out of the year. And so all those same slicing and dicing that we did on the market level, you can also do on the listing level, right? So let's say this is on the same street of a property that I'm looking at. And so I can actually, choose that property and look at what their historical occupancy rate has been. If it has the history, it'll show me the history over the years as well, as far as how they've done occupancy wise. The other big piece of information here, obviously, is what does their calendar look like, right? And so for that particular listing, it gives me what their asking price is on a nightly basis, which nights are booked, which are in solid blue, and which ones are not booked. And so that basically gives you that breakout. Same thing here. You can play around with different data points for that particular listing. And beyond that, if you need to look on the Airbnb platform, if you click on the Airbnb logo, it'll take you straight to their listing. One of the things we like doing is checking the reviews. If you're going to invest in a property, you want to know if there's any complaints about the neighborhood. This one here says neighbors were friendly. It was very peaceful. There's some specific issues here with cockroaches, it looks like, on this particular property. But when we look at the reviews, we typically just want to understand what's going on in the area. So that's good to be able to do that straight off of the platform. You can also click on the VRBO logo, and it takes you to the VRBO listing as well. Same thing there if you want to look at the reviews on VRBO as a difference to see if there's any issues. And so the ability to kind of drill down to that level as you're doing your analysis, I think is definitely huge. So now let me know if you guys have any questions. Throw that in the question and answer box. And here's kind of the icing on the cake, guys. So one of the things that we have to do when we are looking at properties is kind of copy and paste different stuff out of AirDNA into Zillow and other platforms when we're searching. Now, what they have done is they have pulled in all the available listings in each market from the MLS. And so we're looking at this particular zip code. And so these are properties that are available for purchase in that market, and basically allows you to kind of pick out and take a closer look at some of those purchase opportunities. Now, ultimately for rental arbitrage, obviously, you'd still have to kind of search for that zip code on some of the rental platforms. But if you're doing a purchase, this is definitely kind of a good way to kind of streamline the process for you and save you some time. Because again, this is giving you the forecasted data based on what the market's doing. And so if we click on that listing, again, it presents us with the same kind of data breakout, as well as the charts and the ability to look at historical information for that market. So super helpful in terms of being able to analyze. You also have the contact information here for the listing agent. You can actually click on here to view the listing. That takes you straight to, well, maybe they don't have that particular one connected yet, but ultimately you should be able to go right to the listing that's available for sale there too. So that is kind of the full overview. Obviously, there's a lot of different things you can do with this platform in terms of helping with your research, but that is kind of the basic overview. One of the other things that I think is pretty cool here that I'm going to touch on. Let's see here. Let me address some of these questions real quick, and then I'll show you that how it looks for some of the international opportunities. So Tony's asking, are the homes listed for sale indicate that the market they are in is open for short-term rentals? So no, Tony, that's a great question. And so they are not doing, as far as I know, they are not doing any vetting on these properties that are listed for sale to confirm that you are, there's two things, right? So we talked about regulations, but there's also the condo and owner associations that might prohibit short-term rentals. So you still have to be able to exclude that or confirm that that's the case, basically to make sure that there's no restriction on that property. So they are not doing any vetting, or they're simply pulling into each of those markets what they currently show on MLS as properties available for sale. And so that is one additional step that you would need to take to make sure that the property is basically not in a neighborhood that has a homeowners association that might restrict it, and then also that the regulatory city and county regulations don't have a restriction requirement. So that's a great question. So you still have to do that additional work there to make sure that you can protect against that and make sure that that's not an issue. All right, so Rosanna's asking, AirDNA is only as good as the data they have access to. How do they get the VRBO and Airbnb data? Okay, Rosanna, also a good question. And so Airbnb and VRBO basically has the information available on all of their listings online. And so AirDNA obviously they don't have a direct connection into those platforms. And so it's not 90 is not 100% foolproof, because essentially they are basically doing data scrapes on a continuous basis on both platforms. And so what they do is, if they have a property that they know was listed and available a few minutes ago and now it's booked, they basically capture that historical information as that information has been booked. And so it's not 100% foolproof, because you could have somebody that blocked the calendars, could be something else going on there, but that is how they capture that data, is basically by doing screen scrapes, essentially. But that is a good question. So, AirDNA is one of the leaders in the market, and they have the kind of the most historical information. I don't think there's any of the other platforms that go back as far as 5 years like AirDNA does. But like I was describing, and when you do your market analysis, you definitely want to do your own selecting of the comps. Like we looked at, the market had 48% of the properties that had swimming pools. And so, as one example, if you're looking at a property in that market that doesn't have a swimming pool, then you want to make sure you only look at comps that don't have swimming pools, for example. And so you do definitely need to, you can't rely on the average number. You do have to do a deeper dive yourself and kind of qualify those comps, and making sure that you can get comfortable with what the numbers should look like after you've kind of skinnied that universe down. So one of the other things I wanted to touch on, just to kind of show you, that's kind of a neat feature to do, and to be able to slice it and dice it. And so, like I mentioned before, it's not only the US, but as an example, let's take a look at one of the other markets here. And so let's just type it in. That's the other option. You can type in the market that you want to look at. So let's take a look at Costa Rica. All right. So the Costa Rica market basically does the same thing. It scores it based on the different markets that are there. And as you can see, there's a lot of activity, obviously, near the beach towns and so on. But one of the cool things you can do is take a look at real estate type. So in that market, for example, and let's reset this here. So let's say you want to take a look at the unique listings. So, you got tree houses, globes are kind of a new thing. Tiny homes. So depending on your strategy, if you've got, container homes or tiny homes or tree houses as a part of your goals to grow, you can kind of look at what's going on in that market, what those properties are priced at. And same thing, you can kind of do a deep dive on average nightly rates, occupancy, historical, growth in the market, and things of that nature. So just another aspect of being able to kind of, slice and dice the properties based on that. So let me see if we have any other questions here. One other thing here to point out, basically, just to kind of give you guys an overview on the pricing. So like I mentioned before, there is a free version to this. And so the free version basically gives you the market searchability and just kind of gives you the data on the market level. There's another basic level at $15 a month that gives you 2 years historical data and basically gives you the submarkets insights. The pro version at $25 a month gives you 3 years of data and then allows you to do some exports. So some of those charts allow you to export so that you can do your own analysis in Excel as well. And then there's also some additional features that are going to be coming at a later date. It looks like they have for sale regulatory data on the to-do list of things to help understand if that's an issue. So that's something that'll be a later release. And then there's also this advanced version, which basically gives you up to 5 years of history. And then basically gives you kind of full access to everything else, essentially. They are billing this annually. So even at the $15 or $25 a month, when you join, you have to pay the annual amount. It's not paid monthly. They used to do monthly subscriptions that was based on the market, and typically the market was, depending on the size of the city, and it might have been, in the 80 to 90 bucks or lower than that per month, and you only just got that one market. And so, to have these lower prices, to have full access with some limitations, I think is definitely a good thing. Let's see if we have any other questions before we close out. I want to thank everybody for jumping on today. Let's see, we have a question from Judy. Thoughts on Rabu. So Rabu is another marketing platform that helps you do short-term rental analytics, and they are kind of very acquisitions focused. So we do use Rabu occasionally. There are a few other platforms as well, but like I mentioned before, AirDNA has been around the longest, and they have definitely, with these recent improvements, given us access to more history as a starting point, which is definitely helpful. Like I mentioned before, when we're looking at those pre-COVID numbers. Rosanna's asking, can you filter such that you only get the properties in a market with X% or higher occupancy? So that's a good question. I think if you search that market and basically be able to sort it in occupancy level, it will give you the highest occupancies markets first. Same thing with the submarkets. So you can sort it in order and then be able to choose from there. So it's not like you can plug a number in, but you can at least have it presented to you. Same thing with the listings in the higher occupancy. So same thing on listings. So you can change it to occupancy. So it sorts the higher occupancy ones first. So like this shows us the ones that are at 100% occupancy in that market. And so it does give you the ability to kind of look at the higher occupancy when you're slicing and dicing into the market and into the submarket. So again, I want to thank everybody for taking the time today to jump on. I will be doing another training that definitely is going to be doing a deeper dive to help with the analytics on the portfolio level itself. In other words, as let's say you have a particular property in mind that you are basically wanting to purchase or do rental arbitrage on, and so you want to basically run an analysis on that specific property and what's involved with that. And so today was really kind of looking at the market and the submarket and being able to navigate the options and being able to see what markets might be good ones to actually start as a target. And then so our next training that we're going to do is going to focus more so on when you've got a specific property that you want to run an analysis on, and we'll do a much deeper dive there to kind of understand the best way to do that conservatively, to kind of make sure that you're looking at the numbers as a worst case and then being able to exceed from that. The other thing too, if you guys are not already BNB investing clients and a part of our students that we are currently training, and if you are interested in getting more information about that, we can have someone reach out and have a quick 10-15 minute call with you. We usually like to make sure that what your goals and objectives are definitely something that we would be a good fit for you. We have a 90-day program initially that kind of helps you get that first property up and running and generating revenue. And it's a combination of one-on-one meetings with me, as well as some group coaching calls and some online training. And so if that's something that you're interested in, we can definitely set up a quick call and check in with you to see what your goals and objectives are. So thanks again, everybody, for jumping on. And we definitely will keep you posted when we have the next training coming out. And we look forward to seeing you guys then. And so happy hunting with your short-term rentals. And I hope this was helpful today to give you a good starting point and being able to kind of navigate what market you'd like to participate in. So give me a quick thumbs up or raise your hand if you can, and let me know if you thought this was helpful. And you definitely look forward to seeing you guys again on the next one. All right, bunch of hands up. Thank you so much, guys. Really appreciate it. And we'll see you on the next one. Take care, everybody.